Hi there and welcome to Dukascopy TV. Today we'll be taking a look at the Russian equity markets, and joining me to discuss this is Senior Investment Officer with FGP Capital, Anastasia Vlasova. Welcome, Anastasia.
Hi there.
Well, first off, let's look to the year ahead. What are your hopes and concerns for the Russian equity market?
Well, firstly, you need to remember that Russian equity market was one of the worst performers last year, and that was a mixture of a result of a mixture of things. Firstly, the sanctions imposed on Russia after the actions in Ukraine and in Crimea. Secondly, the devaluation of the ruble, and thirdly, the collapse in the oil price. So all these three factors meant that Russian equity market pretty much collapsed. Now, looking into 2015 and 2016, I'm actually much more positive about the market. And I think as far as my main concern is still Ukraine and what's happening, the fighting which is keeps going there, and it does not seem to be abating. And that will be in the headlines this year, and that will be adding volatility into the Russian equity market. However, I think that the sanctions imposed on Russia will lead to the restructuring of the economy. There will be a lot of reviving of the domestic industry, which is now, Russia will need to produce the goods which are now barred from exports. And also, I think that ultimately the oil price will go up in the next 12 to 18 months. And that will be one major thing which will lift the Russian market up, 12 to 18 months from here, I would say 30 to 50%.
So you've mentioned the oil there. So of course that was a huge story in the markets. What are you forecasting for oil for the rest of the year, especially in regards to its impact on the markets?
Okay, as far as the oil goes, you always have to remember that it's a question of supply and demand. And looking at the supply side, at these levels, you need to realize that the shale gas and in the US is going to go bankrupt. You'll see a lot of bankruptcy second half of the year. So there is a huge amount of oil supply which will be taken out of the market. It's practically uneconomical to produce it in the US at these levels. Hence, and you need to remember, this is an industry which requires very long-term investments. So the decisions which were made in 2008 to 2009 to cut the production were felt 5 years later, and we'll see exactly the same effect now. When the oil price collapsed, the companies will be delaying investments or putting them off for a long time. And on the demand side, the world still needs oil, and the world is still growing, the economy is still growing, and so far the humanity has not come up with any discovery of alternative fuel that can be produced on an industrial level sufficient for the economy to grow. So the world will continue to need oil. So it's always hard to make forecasts, but I would say 12 to 18 months from now, I would definitely see oil back to 70, 75 level. And I don't think I'm the only one there. So as far as the correlation, actually there is a very interesting graph that I wanted to show, that the correlation of the Russian market to oil, if you run it, if you look, the Russian equity market is very tightly correlated to the price of Brent or WTI, it doesn't matter. So I always said to my clients, tell me where the oil is going to be in the next 2 years, and I'll tell you what the Russian equity market is going to be. And the case is still today the same. And do remember that after the devaluation, Russian oil companies do have all their costs, or the majority of their costs, in rubles. And they do have a competitive advantage versus their peers in the West.
So let's take a step back from oil and look instead to international relationships with Russia. Is China a potential new strategic partner?
That's another interesting point, that China has been using the situation to its advantage, and it fits Russia very well as well, that the sanctions imposed on Russia forced Russia in a way to the Chinese embrace. And there's a lot of anecdotal evidence that the demand for yuans and for renminbis in Moscow has multiplied by 10 since the sanctions began. Now, a lot of Russian companies are now looking for alternatives in China. China is being now second largest economy in the world and has very, very large financial resources. And they do need the oil resources of Russia as well. So hence we did have a very important agreement signed between Putin and his counterpart in China regarding the Gazprom sending their long-term agreement of supply of gas to China. It will be hard to imagine if the sanctions were imposed 10 years ago, 20 years ago, things would have been much more difficult for Russia. But now, with China being present and China with its economic role in the world, does have it is a viable alternative for Russian companies to find financing. And I can even tell you another anecdotal evidence. I was trying to book my tickets on Aeroflot yesterday, and then accidentally I pushed the wrong button, and it took me to UnionPay in China. So I was trying to pay for my ticket, normally using my MasterCard, and actually one of the options is already to use the Chinese payment system. So that tells you already where the Russian companies are looking, and it's not necessarily a bad thing for Russia, and it will be, it does add to my optimism regarding the market.
It's interesting to see that come into real life there. Thank you so much for joining me today, Anastasia.
Thank you for having me here.
Well, that's all from us here in the Dukascopy studio. Thanks for tuning in, and remember to keep clicking back. Bye for now.